Now we're going to explore the diamond pattern, which is relatively rare and is a very powerful either continuation or reversal pattern depending upon which direction the price breaks out. And I'll show you examples of each. Here's the stock Prudential, and the diamond pattern in this instance you can see defined by these trend lines. And when these patterns are forming, the question becomes whether it breaks to the upside or the downside. And depending on the direction, it either constitutes a powerful continuation pattern or a reversal. In this case, it's a continuation pattern because the stock itself had been moving from $10 up into the 60s, and then it began this long, multi-year pattern creation, which ultimately was broken to the upside in about May of 2013. And that preceded a resumption of that powerful move higher, adding on about 70 to 80% to the existing already quite ascendant price. Here's a different example, ANR. In this case, we have a powerful reversal pattern. What had been happening is that through the course of 2007 and 2008, ANR had benefited from the commodities bull market, and then it began to stall. And you can see here the pattern forming. We'll zoom in for a closer look. So as you can see by these lines, this is the basis of what's called the diamond pattern. You have a expansion in price activity and then a compression. And taken together, these two halves constitute a diamond reversal. And in this instance, it broke to the downside, and that proceeded to drop from about $100 per share down to, well, ultimately just a couple of dollars per share. Although over the grand course of time the move was very tremendous, really for our purposes the true move downward from the pattern was down here to about 15. But that's a very substantial move by any standard. Here's a different example, MIPS. This one is also a reversal. Now here we had a steady ascent going on, and then we had an expansion in price, the greatest of which was around the March 2000 peak of the internet bubble, and then a compression in the range. So we can view here the diamond pattern, which was broken to the downside. Now even though the stock had already lost about 75% of its peak value, this diamond reversal preceded a very large drop downward. Indeed, it didn't bottom until it was virtually a penny stock in the autumn of 2002. So ultimately lost about 99% of its value. But even after it had dropped substantially and broke through the diamond, it still lost well over 90% of its value from that $25 portion. And then our final example here of diamond is BEXP. This is Brigham Exploration. And here again we've got, instead of a reversal, a continuation pattern. So this stock had moved from almost about $1, and it moves very substantially higher, a 4-digit percentage gain. And then it began the creation of this diamond. Zoom in here tightly, you can see we began our price expansion and then our price compression. And it threatened to break beneath it, but it did not. And ultimately it broke above the diamond, and for good measure it actually retraced just a touch, tagging that trend line, demonstrating that this line had changed from resistance to support. And so the entry point here would have been about $17.50, and that preceded a very good move higher to well over double that amount. So this pattern can go both ways. You have to pay attention to which way it breaks, but it's relatively rare and not that easy to spot. But if you do find one, it can portend very good fortune for you.